Okay, let's dig into this. Ever look at a financial chart and just feel lost, like it's some kind of code?
Yeah, it can definitely feel that way.
Well, today we're going deep. We're looking at how a really experienced trader, Mansi, we're talking 30 years experience, how he actually reads a chart, what he looks for. Think of it as getting a peek inside an expert's process.
And what's really great about Suryawanshi's method, developed over, decades, is how systematic it is, even when markets look chaotic.
Right.
We're going to pull out the core stuff: price action, risk, the important bits, stuff you can actually use.
Exactly. The goal here is simple. Help you get better at reading the market's signals, wherever you're starting from. Maybe have a few aha moments along the way.
Hopefully.
So where does someone like Suryawanshi even begin? What's step one when he pulls up a chart?
Well, he starts big picture, price action, trend. Is the market generally going up, down, or is it just, chopping sideways?
Okay, the overall direction.
Yeah, and he uses tools like moving averages, the 50-day, the 200-day are common ones to help see that general direction. They kind of smooth out the noise.
Right, those lines showing the underlying current. So after the big picture.
Then he looms in a bit. He looks for key price levels, support, that's where buyers have tended to step in before, and resistance, where sellers usually show up. Think of them as zones, really, not hard lines, places where a reaction is more likely.
Okay, zones of interest.
Exactly. And then candlestick patterns, those individual price bars. They're small, but they can hint at shifts in sentiment, like who's winning, buyers or sellers, sometimes before the bigger move happens.
Like a doji showing indecision or an engulfing pattern suggesting a reversal.
Precisely those kinds of things. Early clues.
Okay, so trend, key levels, short-term sentiment. What about the power behind the moves, the conviction?
Ah, yeah, that's volume. Super important. Does the volume confirm what the price is doing?
How so?
Well, like if you see a breakout above resistance, you want to see high volume with it. That suggests real strength, real conviction.
Okay.
But a rally on, say, weak, drying up volume, maybe not so convincing, could be suspect. And watch for big volume spikes right at those key support or resistance levels, too. Could be institutions making moves.
Got it. Volume is confirmation.
Yeah.
So what about indicators, things like RSI or Mansi?
He definitely uses those. Momentum indicators, strength indicators, RSI, MANA-CD, they help gauge if something's getting overbought or oversold, or if the momentum behind the current move is starting to fade. What he really looks for are divergences.
Divergence?
Yeah, like when the price makes a new high but the indicator doesn't, or it makes a lower high. It's a disconnect.
Ah, okay. Price says one thing, momentum says another.
Exactly. Can be a really useful early warning sign that a reversal might be coming.
Interesting. And chart patterns like head and shoulders, triangles.
Yep, those classic patterns. He sees them as potential kind of roadmaps. They can suggest where price might break out or reverse.
But there's always a but.
Yeah. Context is key. A bullish pattern, like a flag, means a lot more if it shows up within a clear existing uptrend. In choppy, directionless markets, less reliable. Avoids false signals that way.
Makes sense. Context matters. Does he use Fibonacci levels too?
He does. Those retracement levels, 38.2%, 50%, 61.8%. He looks at those as potential spots where a pullback in a trend might stop and reverse.
Like natural pausing points.
Kind of, yeah. Places where the market often finds its footing or changes course. He combines this with looking at, historical price action and pivot points to find those support and resistance areas too.
So it's building a case layer by layer. It's not just the chart in isolation then.
Oh, definitely not. He's always looking at the bigger market picture. What's the economic news? How's the overall sector doing? General sentiment. He even checks correlations. How is this asset moving compared to related ones?
Like checking if related currency pairs are doing something similar, or if the whole sector ETF agrees.
Exactly. It all helps confirm the bias, build a stronger picture.
Okay, so once he's done all that analysis, how does he decide if a trade is actually, worth taking?
It comes down to the risk-reward setup. Simple as that, really. Can he find an entry point where the potential profit is at least twice the potential loss if he's wrong?
A 1-to-2 ratio or better.
Minimum. And he needs a clear place to put his stop losses exit if it goes bad, and a reasonable target for taking profits. And crucially, it has to fit his trading plan and his own risk tolerance.
Right, managing the downside is just as vital. Got it. And the last piece seems to be multi-time frame analysis. looking at different chart lengths.
Yeah, that's crucial for perspective. He might use the daily chart as his main one for finding swing trades or position trades.
Okay.
Then he'll look at the weekly chart to understand the really big long-term trend and major levels.
Higher time frame for context.
Exactly. And then he might drop down to a 4-hour or 1-hour chart to really pinpoint his entry or manage his exit. Like weekly shows uptrend, daily shows a pullback setup, and the H1 helps nail the timing.
So tying it all together, Suriwanshi's approach sounds incredibly disciplined. It's about systematically layering information price, volume, momentum, patterns levels, context, and always managing risk across different views of the market.
That's it perfectly. It's about finding confluence, multiple signals pointing the same way, and being strict about risk. No shortcuts.
So maybe for you listening, think about a chart you looked at recently. Considering these elements, what's the immediate feeling you get about sentiment? And what other pieces would you want to investigate now to build a clearer picture?
Yeah, it's about starting to apply these ideas bit by bit to how you see the market telling its story.